life, access to income that is livable. In the midst of this crowd, everybody had their t-shirts on, was Congresswoman Tlaib. And, you know, for me, just walking down this street, she could have been anywhere that moment, anywhere at that time. There was all the cameras that were there because we're there for this big debate. And there she was on a street corner with her constituents talking about livable wages. And I just think that's a testimony and a testament to the type of progressive warrior that she is. And so from the bottom of my heart, Congresswoman, I just want to say thank you for everything that you are doing in a very difficult and challenging time. And now I will introduce Congresswoman Tlaib to share a few remarks.
Thank you so much. I so appreciate it, Bakari, and all of you for your incredibly important work. I know you have seen the faces of so many of my families, as well as families in your communities you work in, when they are given a home, how just transformative it is. So many of our families are going through just difficult time, but real trauma of othering politics, trauma of systems that have been set up to oppress them. And so I just thank you all so much for your, just your incredible work. For my district, and I know Bakari and President of the organization knows this, but the pandemic, if anything, showed the ugly face of the real economic divide in our country. When I saw the statistic, my heart just fell. But close to 13% of my Detroit residents have reported being evicted or otherwise forced to leave their house. That's 88,000 folks without a home in 1 year, in just a close year there. And when I look at even Black homeownership, Michigan lost more Black homeownership than any other state in the country. All of this to say is, I think Sonia Renee Dawson said it beautifully, and she said, what was going on prior to the pandemic wasn't normal. We shouldn't normalize what was happening before the coronavirus, before this pandemic, and that if anything, this is the opportunity for a new garment, a new way. And I know some of your questions are what we can do. One of the key areas, as you all know, is this pushing on a COVID relief package that goes to the core issue of people not being able to afford their rent or their mortgage. One of the key provisions in there, and this is Chairwoman Maxine Waters, so make sure if you ever can shout her out, please do. She has not budged on this. She believes in this to the core in every single call, every single committee hearing. She brings it to the forefront that we need rental relief, which helps not only our neighbors that are renting, but also many of our folks that own these properties. These are mom and pop kind of landlords, not the kind of big development folks that you see. And so she's pushing very, very clearly to have direct relief. And one of the things I know, the importance of creating new or amending current federal legislation. Many of you have read this, but I don't know if you really understand. This is before the pandemic, but we have home ownership among our Black neighbors in our nation right now. And numbers are less than it was when we passed the Fair Housing Act. Just think about that for just one moment. And that alone shows that, again, these systems were broken and are not working. The federal policies are not being enforced as is. I don't care if it's a Community Reinvestment Act treated as some sort of checkbox for big banks. But the fact of the matter is it's not working for many of our families. So it's very important that we have effective, property tax exemptions, payment program options, and all of that are accessible. Even when we announce the so-called moratoriums and the relief, you all know, because I know many of you, even when you finish selling the home or you finish helping somebody get a home, they still call you about their mortgage company. They still call you about the number of issues that they're challenged with. And many of them were locked out, that if you didn't say certain words to Wells Fargo, if you didn't say certain terminologies when you called to get mortgage relief, you were denied access to that relief. And so, again, I know Chairwoman Waters was on fire one time. She could not believe what she was hearing about many of these bigger banks and what they were doing to folks. It is also important, as you may have seen, there is a real talk and discussion of what happens beyond the moratoriums that you see in some of the states. And there are real conversation about, can we cancel, mortgage and rent? It's called the Mortgage, and I don't want you guys to check it out, Rent and Mortgage Cancellation Act, which would institute a nationwide cancellation at the time. And this coincides also with my push for the Automatic Boost to Communities Act. Bakari, everyone, I don't know if you realize, like, the one-time payment of $1,200 just alone at time when it launched, it actually lifted people out of poverty like that. Just for that 1 month, you saw that bump. When we bail out corporations, that money's kind of hoarded. It's just kept in, and it's not pushed in back into the local economy. And so the ABC Act would give folks $2,000 per month during the whole time during the pandemic, and then $1,000 a month, a year out after that. But I think it's really important that these are the things that we do, is basically giving people money directly in their pockets. Because, and I know some of you work very closely with our banks. Some of you work very closely with some of these institutions, but they really are not implementing as intended by Congress or legislation. Sometimes it is so difficult to get them to do right, or they're so disconnected, unintentionally maybe, or whatever, are so disconnected to how to implement some of this to make sure that, again, we're helping families around the nation. So direct payment is so important during this pandemic. I hope we're pushing for that. I know many of the restaurants in my district, I love the fact that they're pushing for reoccurring payments, because they know that helps their local businesses. And I do believe, when the moratoriums are over, we need that support for our families to be able to pay, again, their rent and their mortgage. And then I think, there needs to be kind of a, what you would say, review of the Fair Housing Act, the Community Reinvestment Act. You all have heard it over and over again. I'm tired of the hearings. I'm tired of it being studied. We know it's not working. We see people getting homes ripped away from them. If it's not tax foreclosure, it's mortgage foreclosure, or banks are not lending to our people. And so we need to have a real, honest, speak truth to power kind of conversation about the fact that these acts lost their teeth, either through case law or through the way the federal government has been implementing it. And I'll leave you with this. My Justice for All Civil Rights Act was introduced today. Many people are going to say, well, I don't want to open up the Voting Rights Act, Rashida. I don't want to open up the Civil Rights Act. I don't want to do all this. Why this is important is, if it wasn't many of the civil rights leaders, many of them putting their lives on the line, they pushed for the Civil Rights Act to be implemented in a way that it wasn't just direct, intentional discrimination that you could go to court with, that it also was disparate impact. So the impact of the policy in itself is discriminatory on a ground. That should be able to give you access to the justice system to say enough. Because I'm tired of us waiting for, and it's true, this is how many of these banks are getting sued, for the email or the whistleblower where it says, hey, if somebody comes in with Spanish speaking or accent, increase their interest, or, in some cases, directing certain loans to certain people, right? All of that to say is that direct intentional discrimination shouldn't only be the threshold. It should also be disparate impact. If we're seeing that banks are not lending to people that look like us, that should alone be able to have us access to look into it. So thank you all so much. Bakari, I hope I answered most of the questions. I don't know. I thought it was like a panel thing. Maybe I don't know if I did it wrong. I apologize. But I really do appreciate all of your advocacy and your continued work.
No, you did it perfect. You got your own limelight, your own shine. You did it absolutely right. So thank you so much. I know that you are out making sure that every body in the state of Michigan gets access to the ballot box. So before you disappear and go do your work that is important during these last 7 days, I just want to say thank you for joining us, even for a brief moment. We're now going to turn to Steve O'Connor, and then he would be followed by Dr. Vanessa Perry for some brief remarks as well, before we get into our panel discussion.
Great, thank you. So I just want to say a few words of appreciation to NAREB as a leader and partner. They've been a leader on homeownership now, Black homeownership, for decades, and that leadership is needed more than ever, as underscored by the challenges from the pandemic. And I want to appreciate them also as a partner, both at the national level. Antoine Thompson and I co-chair the National Housing Conference's task force on Black homeownership, and you'll be hearing from David Dworkin, their CEO, in a minute. But also at the local level, the Mortgage Bankers Association launched a place-based initiative in Memphis, Tennessee, dealing with African-American homeownership, and Antoine and NAREB has been a partner there, and they were getting ready to launch one in Columbus. And again, NAREB has stepped up to be a partner. So we need fresh ideas. We need new approaches. And I know we can count on NAREB, and this event is part of that. So thank you very much.
Well, thank you, Steve O'Connor, for sticking to the time limit down there. I have to appreciate you. I hope everybody who's on my panel coming up momentarily appreciated how deep he was. And he said a whole lot in very few words. So we're going to keep it going real smooth like that. We will now be following the program as outlined, and we'll have a few words from Dr. Vanessa Perry.
Great. Thank you. Thank you so much. I am delighted to be here. I'd like to thank NAREB for the opportunity to spearhead the 2020 State of Homeownership and Black America report. And I'd also like to thank the distinguished scholars and experts that also worked hard to contribute to this year's effort. So if you'll pardon me for a second, I'm going to share my screen. Okay, I don't have a lot of time today, but what I hope to do is just share some highlights of this year's report in hopes that you will take the time to review the report in more detail at your convenience. This year's report is about progress and policy during this pandemic. In the next few minutes, I'm going to talk about the current state of homeownership in Black America, untapped opportunities for this market segment, some of the key challenges that Black home buyers face in the mortgage and housing markets, and then I'll talk a little bit about some solutions that I think we should pursue as an industry. 2020 started out with good news for Black homeownership. The 2020 homeownership rate for Black Americans is 47%. It was up 5 percentage points from 2019. Obviously, our main concern is how the pandemic and the current economic situation will affect this rate going forward. But at the start of this year and going into the pandemic, the news was good. This chart shows in red the Black homeownership rate over time, and the white homeownership rate is what you see in the top line in green over time. One thing worth noting is that despite our recent gains, we still haven't caught up with the homeownership rate that was in place at the time of the subprime mortgage crisis around 2008. Another point is that the gap in homeownership rates between Black and white households has been relatively constant over time. And the current homeownership rate is still only slightly higher than it was at the time of the passing of the 1968 Fair Housing Act. So although we have a long way to go, there are significant opportunities to increase Black homeownership in the United States. In 2019, lenders received about 966,000 mortgage applications from Black prospective home buyers. And according to Freddie Mac, there are 3 million Black home buyers that are what they call mortgage ready. That is, they have the income and the credit history and other financial characteristics to be able to qualify for a mortgage. We have to keep reminding ourselves why homeownership is so important. It's the key to wealth accumulation. Due to differences in home values and costs, The wealth accumulated by white households, which is shown on the right in this chart, in these charts, far exceeds the wealth accumulated by Black households. Why do these disparities exist? These patterns are manifestations of systemic racism and disadvantage that has accumulated over generations. This affects Black home buyers in all three criteria areas for mortgage lending: capacity, credit history, and collateral. So what this diagram shows is how the average Black mortgage borrower differs from the average white borrower. Black borrowers are more likely to obtain government-insured FHA or VA loans. Due to the history of discrimination, redlining, and cumulative disadvantage, Black borrowers tend to have higher debt levels, lower credit scores, and are able to make lower down payments. This leads to significantly higher loan rejections, typically for debt and credit issues. When it comes to collateral, there's also major differences between Black and white households. Black homeowners tend to own properties with lower values, and they tend to enjoy lower levels of house price appreciation over time compared to white homeowners. Taken together, these disparities result in Black homeowners paying significantly more than white homeowners. If you look at this chart, the dark red bars show the interest rates paid by Black non-Hispanic homebuyers. FHA mortgages are on the left, and the conventional market, loans in the conventional market are on the right. And what you can see is how much higher the FHA interest rate bar is for Black borrowers than for white FHA borrowers, which are shown in blue. It's also interesting how much higher FHA rates are compared to, for Black borrowers, compared to Black borrowers even in the conventional market. The light red and light blue bars are Hispanic borrowers within each racial category. And that's shown to make it clear that racial dynamics are more significant than dynamics based on Latinx ethnicity. Bottom line is that due to higher interest, higher taxes, higher insurance premiums, over time, Black homeowners, as it stands, on average, lose about $14,000 over the life of the loan and about $67,000 in retirement savings because of these higher costs. So from a public policy perspective, what should we do? First, we must acknowledge the cause of these disparities. It's a history of discrimination and its effects over time. Then we need to adopt solutions that address these issues directly. We need to extend pandemic protections to prevent financial devastation. And it was really nice to hear Congresswoman talk about that. We need to restore fair housing and fair lending regulations and enforcement, such as the disparate impact rule and others. We need to expand down payment assistance programs, such as the recently proposed American Dream Act. We need to demand that Freddie Mac and Fannie Mae do their part. And we need to leverage the influential network of NAREB and other groups to put pressure on state, local, and federal policymakers. I encourage you to explore these topics in detail in the report, which is now available on the website, and I look forward to our discussion. Thank you so much. Mr. Sellers, I'm going to turn it back over to you.
Well, I am sitting over here with my mouth wide open because I guess we all knew, Dr. Perry, that we weren't there yet. But whenever you're able to put data behind the fundamental inequities that we all know exist, it's very powerful. And so I think that that report is going to do us a lot of good. And I will be sharing it and utilizing it in my daily work as talking points when I go on TV, trying to convince people that racism is still here. But you don't need to know my pain. Now I want to bring out my panel. It's an esteemed panel. Dr. Perry, you stay where you are. We have Ms. Michelle Calloway, our board chair, who is joining us on the panel. Mr. David Dworkin, who's president and CEO of the National Housing Conference, joining us on this panel. My friend who was following me around the country, I guess, Mark L'Oreal. I still call him Mr. Mayor, but all of you all know him as not just mayor, but as the president of the National Urban League. We have Reverend Dr. DeForest Soares. We have Mr. Antoine Thompson, of course, and Mr. Donnell Williams. So what they did was they gave me about 37 people on this panel. And this is like the nights on CNN when you got everybody on the panel. We got about 30 minutes and I got some questions and want to be able to get through the questions. So I say all of that to say, let's try to make sure that you get everything out, but be mindful of your other guests. You know, my first question is, the racial gap in ownership was created by federal policies, to kind of piggyback on what Congresswoman Tlaib was talking about. It was intentional and purposeful. It was created by federal policies and legislation. Can this 30-point gap be eliminated without the U.S. government? And I want you to be thinking of how we reimagine home ownership going forward. First, I want to start with you, Mr. David Dworkin.
Thank you, Bakari. It's great to be here, and especially thank you to Antoine Thompson and all of our incredible panelists, Antoine and Steve, as he mentioned, and I worked very closely together on dealing with these issues, and we recently formed a collaborative of organizations along with the National Urban League and NAACP to close the Black home ownership gap, starting with 3 million new African-American homeowners. And that's a net new number. I think that's very important. We have to be really focused right now on not taking any more losses. We're in a major recession and we know where the brunt of that lands. I mean, the short answer to your question is that there is no solution to the home ownership gap without dealing with federal policy, because federal policy caused the Black home ownership gap. It did it purposefully and it did it quite effectively. And so if we're going to reverse that, we're going to have to actually directly address some of those issues. Now, people will say, well, we don't have redlining anymore, or we don't have, legal discrimination. And that's not true across the board, as any, mortgage tester will tell you. But the fact is that it has improved a lot. And we have said this is illegal. That's important. It's just not enough. And so I think it's really critical that the federal government create direct and specific incentives that are racially targeted. You know, we've got into this habit since the passage of ACOA where, clever corporate lawyers have said, well, you can't discriminate against white people. Well, I want to reassure you that I am not discriminated against. And so if you were worrying about that, I'm going to be okay. The reality is that white homeowners have gotten very specific benefits over time that accumulate. And one of the biggest ones is, what I call the daddy down payment loan. If you're a multi-generational homeowner, your family has the wealth and resources to help you with your down payment. If you have been excluded from that, then those federally encouraged benefits are not available to you, and they should be. And they should be available to you because they were available to me and others who look like me. And this is not rocket science, and it's not special treatment. This is about saying we've given special treatment. We just want everybody to receive it now. And I think until we actually think about that and stop using low and moderate income census tracts as a surrogate for helping people of color, which it is not, then we're never going to be successful. The federal government has to contribute to leading the way and create the incentives that we need to be successful, and others will follow when the message is clear. Unfortunately, the message has also been clear today, but not quite not quite in the direction we'd prefer.
Thank you for that. Mr. Mayor, Mr. Urban League President, my good friend Mark Moriarty.
Yeah. Thank you. Thanks, Bakari. Thank you for your great voice in the public square, on television and elsewhere. Thank you so much. And let me thank the National Association of Real Estate Brokers, all of the other panelists, especially David Dworkin, who we've worked together for many, many years. Let us be absolutely clear as a bell. The federal government and public policy created, aided, abetted the wealth and the home ownership gap and the racial wealth gap in America. And the federal government is an essential element in trying to rectify it and correct it. And what we know from the last 40 years of public policy is it will require intentionality to deal with the racial home ownership gap, not simply generalized policies to deal with LMI, low and moderate income communities, because of all of the things that we know and learn. The racial home ownership gap and the racial wealth gap goes all the way back to the Homestead Act of 1862. And the failure of the Reconstruction Congress, rather the cancellation of the 40 acres and a mule program by President Andrew Johnson. And it extends all the way through the founding of the Federal Housing Administration and racially restricted covenants, and the reluctance of banks consistently and outright discrimination in the housing market. So what we need is, going forward, to address this, we have to turn our page from a policy and mentality point of view to a more intentional effort to confront the racial home ownership gap. Now, the last 15 years have been brutal. Dr. Perry took us on the roller coaster ride of the numbers. But the last 15 years have been brutal in that, first, you had this period of Black people being abused and taken advantage of by predatory lending. Then you had the narrative of the weapons of mass deception. Those who said that the bank failures and the foreclosure crisis was created by the, quote, pressure to help Black and brown and low and moderate income people become homeowners. And then you had, post that, the loosening under this current administration of the enforcement of consumer protections and civil rights legislation. So we have to understand public policy was a creator, aider, and abetter, and that going forward, we are going to need a new approach, an intentional approach, to try to close the racial wealth gap and confront the home ownership challenges that we face. And when I say this, we have got to also be clear that when we talk about the housing problem and we talk about affordability, yes, we're talking about creating a greater supply of affordable rental housing, but it doesn't stop there. It's got to extend to owning a piece of the dirt. There was 40 acres in the mule. Now we need 400 basis points in a mortgage to be the clarion call in these times.
Thank you so much, Mr. Mayor, my leader. I'm sure we'll be seeing each other a lot over the next running down these streets. I love it. Dr. Perry, you outlined vividly the issues that we're facing, the systemic injustices and inequalities we're facing. Talk about the solution when it comes to the federal government. I think we all understand that the answer to the question was yes.
Yeah, right.
Government is required.
Yeah. So thanks. I just have to say that I can't add much to my predecessors who've already addressed this, because they are spot on about the federal government being responsible for a lot of these circumstances, for the bulk of these circumstances. In other industries, I might actually go so far as to talk about self-regulation as a possible solution, but I'm not even going to go there because I don't want to be laughed off of this panel. But it's something worth thinking about. And what happens in other industries that approach self-regulation is they finally start regulating themselves when they realize that the federal government is going to make it more difficult for them to do business. And then over time, the government can back off the regulation because they've sort of turned over regulation and enforcement to the industry itself. So it would be wonderful if we could start to approach that. Be that as it may. We've seen very little narrowing in the home ownership gap and virtually no progress in more than 50 years. And that's not for lack of trying. I mean, there have been so many programs and initiatives and public-private partnerships and nonprofit community group and housing advocate work. And none of that has really had any real significant impact. Again, not for lack of trying, but because these existing policies and existing regulatory framework does not address the fundamental underlying issues. That what we are seeing today is the result of historic discrimination and in other arenas, actually, employment and education and healthcare and access to credit and housing. And until these are accounted for, then we are just going to see these, little 1 and 2 percentage point bumps every time the economy is going well, and we'll be back to square one.
President Williams, do you want to chime in, or do you want me to go on to get a few more voices in as I try to keep you as close to schedule as possible? Man, the mute button is amazing. Have y'all ever been able to mute your president?
Very rarely, very rarely.
Take this to the board meeting.
You can skip right over me in the essence of time, in consideration of time.
All right, that's what I wanted to do, because I wanted to ask this question, and I wanted to bring in Reverend Dr. Frederick Haynes, the second senior pastor of Friendship West Baptist Church. If you could have a 5-minute meeting with Joe Biden or Donald Trump, what 2 things would you tell them to do to help grow the rate of Black home ownership in the United States? And I also just want to put a pinpoint on this as you guys are going through your activism. I know Derek Jackson and others are already on this, but you got to start the work now, especially as an organization, because you can't wait till the end of inauguration to begin the work, because that transition work is already happening today. It's been happening for the last 3 months. And so I hope that the organization is peering in, looking behind the tent at how we can get some of these questions answered. But Reverend Haynes, I'll let you take that. If you got a 5-minute meeting, how would you go about handling that?
Thank you so much, Bakari, for your leadership. Basically, we have been given an outline by those who have already spoken, especially Mr. Mayor, the president of the National Urban League. And so there would be 2 things. I would remind Mr. Biden that it was public policy that set the stage for the disparity that exists right now, not only in terms of the wealth gap, but also in terms of the housing gap. And so since it was intentional through public policy that certain persons were privileged and others were underprivileged, it's going to be necessary for there to be public policy that, again, targets those who have been targeted for abuse, targeted for being left behind, and ensure that they have an opportunity. And some of those statements have been made already. And so that would be the first thing I would remind Mr. Biden, due to the fact that there are so many who have a limited understanding of systemic racism. This is a classic case of how systemic racism has contributed to the wickedly widening wealth gap that exists in this nation. That's number one. The second thing I would say, along with targeting through public policy those who have been disadvantaged. I would also say it's going to be important to target through public policy the current expressions of racism that continue to exist when it comes to our efforts to secure public policy. Number one of the things that has happened, and I've seen this with members of our church, I've experienced it myself, and that is there are appraisers who take it upon themselves to deflate the cost of the value of homes on the side of town where most of us live. I'm in Dallas, Texas. The south side of town comprises 55% of the land mass, but only 15% of the land value. And so appraisers tap into what is already racist disparity, and they utilize that to ensure that when I'm trying to sell my home on the south side of town, the value of my home is much less than a similar home on the other side of town. And so racism systemically is not just something that is the result of what has been happening in the past. It is a result of what is going on even right now. Not only that, but we've discovered, sadly, that when it comes to the whole credit piece, the credit game is such a game that oftentimes I think most deaf would put it like this: every time we keep up the pace, that's when they change the tempo. And so there is a credit game that goes on that precludes us from having the appropriate credit to get the kinds of loans that are reflective of all that we've done by way of hard work. It's not that Black folk are trifling. It's not that Black folk have not handled their business financially, but in too many instances, you have racism being played out when it comes to how loans are given, how credit is manipulated. And so it is important that we not only make up for what happened in the past by targeting those who have been disadvantaged in the past, but we have to deal with the racism that goes on right now. If we're going to have this reckoning, we got to go all the way, or we ain't going at all.
Well, the doors of the church are open, and make sure that you tithe and leave your offering as required. Thank you so much, Reverend Dr. Haynes. That was a word, and you hopefully will get that opportunity to speak that truth to power at the tables where these issues are discussed. I want to ask the same question to Antoine Thompson. I want to bring in Antoine Thompson and the chairwoman. Actually, I want to bring the chairwoman in first, Michelle Calloway, and then I'll bring in Antoine on. If you had two things to say in your discussion with either Trump or Biden, what would those things be?
Well, actually, Mr. Sellers, I'm going to have you go on to some of the other panelists because I want to bring in some questions from the audience. So I'll defer my time to some other panelists.
Okay.
Just so I can involve the audience.
All good. All good. Well, that's good. I like the way we moving now. Let me bring back in Mr. Dworkin and Mark Morial. I'll let Dworkin go first and Morial go second to answer this question, and then we will take maybe have time for one or two audience questions, Chairwoman.
Thank you.
Sure. So briefly, I'll just say that National Housing Conference is a nonpartisan organization. So please take my comments in the spirit in which they're intended. To President Trump, I would say, stop it. Just stop it. Stop doing that. It's not helpful. It's not relevant. We don't have to save the suburbs. They're well integrated in many communities. We just need to focus on the solution. And this is not it. To President Biden, I would say we have not had a president of the United States talk about affordable housing and racial justice in housing since Jimmy Carter. So it's time for presidential leadership. There are a lot of good people who are working hard on this, but we need to hear from the president that it's important, and we need to hear it a lot. And that will empower the people in your administration to actually take some of these ideas and make them policy. But without presidential leadership, the federal government is not going to make a difference in this space.
My leader, Mark Morial. He might have escaped me for a minute. Okay, well, let's go to Madam Chairwoman, you want to get a few questions out of the.
Yes, absolutely, because it's going crazy. They are very, very excited about the conversation. I'd like to direct this. I'll go to Mr. Dorkin because I don't see the mayor on. Comments on the current President Trump's discussion on saving the suburbs. Saving the suburbs. That has been a big question here on our chat. We're talking about federal accountability, and we have at the top talking about saving the suburbs.
Yeah, well, we know what that means, and they don't need to be saved. They're doing fine. It's where I'm from in Detroit, two of the most sought after places to live in the metro area are Southfield and West Bloomfield. So the problem is that it's too hard to make a mortgage. It's too hard to get one. It's the incentives that are supposed to be embedded in the system aren't there. We've come to use zoning as a surrogate for discrimination. When you look at zoning restrictions throughout the country, you can almost always trace them back to the early 70s or the late 60s. And that's because as soon as the Fair Housing Act was passed, people said, we have to find another way to do this. And so I think it's incumbent on us to talk about what the solution is and to stop stoking people's fears, because there's nothing to be afraid of. And people actually aren't afraid. I don't think this is working one bit.
Thank you. Thank you for that response. The next question of much concern is, as we discuss again, holding the federal government accountable, conversation on the chat about CRAs, talking about funds that are supposed to be disseminated through the banks that are allocated to the banks, never reaching down to our local markets. And some suggestions from either one of the panelists. We have Mr. Soares and Mr. Haynes about what some suggestions could be for us to rally around to hold the government accountable for fundings that should get to our communities.
I think we should probably, I think Mr. Soares had to drop off, as did Mr. Reverend.
Okay.
So I think that's a really good question. I don't know if Dr. Perry would like to chime in.
That'd be great.
Just because, she's been giving us some very bold responses.
Absolutely.
For an opportunity to respond as
Dr.
well.
Perry?
Yeah, sure. Okay, sorry. I am busy reading the chat, which has got all these really, really insightful. So I missed the question, so I apologize for that.
Yeah, absolutely. In our discussion of holding the federal government accountable for at least their part in what needs to be done moving forward, and especially with regard to the banks, when there are fundings to help us with addressing economic inequities to get to our communities, the funding, making sure the funding gets to the community. So we're looking for suggestions from this distinguished panel on what we can do to help make that happen, to expedite that, to move that forward.
So I think that, organizations like NAREB are particularly positioned, because if you call your local or state or federal representatives, they are going to talk to you. And they have every incentive to do so and very few incentives not to do so. And now that we've had these kinds of discussions and what's going on in your local community in terms of, what's the best way for funds and support to be allocated, I would say meet with them, take it directly to them. But I think one of the things we do is often assume that elected officials kind of know exactly what they should be doing. Mm-hmm. And I think they need specific directions. Like, first, you need to do A, B, and C. And that it's harder for people to push back when you've given them specific directions, one. And two, it's easy to check to see whether or not those things are done and hold them accountable. But NAREB members are extremely influential in their communities and have, extremely expansive networks. So let's take advantage of that. That would be my suggestion.
Madam Chair, a little presidential privilege, if I
Yes,
may.
yes, sir.
I want everyone to understand, and I want to be really crystal clear that when we say the government needs to get involved, we really mean it, because this is what happened. This is the truth. When they set up FHA, it was for whites only. Okay, they set up FHA to give mortgages out, but the appraisals were structured and it said, Google it, for whites only. There's a HUD Section 184 right now today that says it's a program, a Native American homeownership program today. So there's no way that the federal government cannot or should not be a active participant. You heard it here first. 2 N's and 2 L's, if you want to quote me. But so we have to engage. They have to be engaged. So that's what NAREB, that's what the direction we're going in. We will, Dr. Perry, put those steps in place. I've initiated a bunch of different software programs and things like that. So we are moving in that direction. So I wanted to be known so that everybody's crystal clear on our position.
Mr. President, would you comment, I'll just take liberty 1 second. If you could comment a little further on Section 184 so folks can understand and how you've been pushing this for the last several years.
Okay, HUD Section 184 says that Native Americans can have a special, it's a Native American home ownership program. Okay, and then combined with the FHA, that was, it's no longer there, but for whites only. But why shouldn't we have an African American home ownership program? Why shouldn't we have it? We are in discussions right now today to develop an African American, Black home ownership product for a mortgage. Why wouldn't we be able to have that after we were deprived and alienated and redlined and discriminated and prejudiced against all these many years? So now it is time. This is the time. So we need everybody to get involved, everybody to be active. Yes. I'm not asking you to get off your couch. I'm asking you to be active in whatever way you can play a role, but this is where we're headed. We're looking for an African-American mortgage product. Thank you, Madam Chair.
Thank you, Mr. Sellers.
I'm going to do my best. We're going to go to commercial break. I'm just joking. Well, we try to keep everybody on schedule because y'all will be here till 4:30. I won't be here, but y'all will be here till 4:30.
Thank you. Thank you very much, sir.
Thank you.
Everything. We know you have to leave.
No, but I'm gonna pitch it now to a video from Congressman Cedric Richmond.
Bakari, I don't think there's a video.
All right. I think that she was going to get the video, but we'll keep it going until you know what, we'll just keep it going until we'll keep the program rolling. That's nothing. This is live TV, so we'll keep it going. Let's bring on Renee Wilson.
I don't know if she's on.
All right. Because we're going to have some partner remarks here right after the video. I hope Derek's getting ready to tee off. Is Derek still up there? Because Derek.
I'm here waiting for you. So
we're gonna find somebody ready to go. Keep it moving. Keep it interesting.
Absolutely, I'm here, so I can help you out with that. So I can take it from here. Unless you have any other remarks you want to summarize.
No, just thank you so very much for having me, and you guys have a great leadership with the chairwoman and the president. So thank you so much.
Thank you, sir, for your time.
Thank you.
Thank you for that first panel. I see the chat is really going. I see a lot of people excited about this conversation. It's a wonderful thing that our president has put together here. So just keep those questions coming, and we'll get as many answers as we can. But it becomes my privilege to introduce you to the people that help make this possible. We have some partners here that have given their support to the National Association of Real Estate Brokers to bring you this national conversation on Black home ownership. The first person I would like to introduce is Ms. Chrissy Johnson. Chrissy Johnson is the Vice President for Federal Policy and External Affairs at Quicken Loans. In this role, she coordinates her organization's position on and mission for federal public policy issues and leads third-party stakeholders outreach efforts, including trade associations, consumer advocacy groups, and civil rights groups. Ms. Chrissy Johnson.
Thanks, Derek, and good afternoon, NAREB. It's great to virtually see you all again. Like you said, I'm Chrissy Johnson, and I am honored to be with you all here today on behalf of Quicken Loans and the Rock family of companies. As the nation's largest mortgage lender, we understand that housing and quality of life go hand in hand, which is why we are very proud to stand alongside you, the National Association of Real Estate Brokers, as you announce your critical findings today on the state of housing in Black America. We are living in a pivotal moment of American history, as we just discussed, with much of the nation looking more deeply, finally, at the systemic effects of discrimination throughout our society and economy. And the effects of COVID-19 underscore those existing disparities even more. So unfortunately, housing discrimination, from the intentional to the inadvertent, remains a stumbling block for millions of Americans to gain fair access to quality and affordable homeownership. And with our roots in Detroit, we are inspired by our communities and driven by our what we call a for more than profit philosophy to drive some real systemic change. We have investments in sustainable housing and bridging the digital divide in Detroit. We are investing in talent development, technology innovation, and fair housing policy advocacy across the nation. And we at Quicken Loans know that where you live matters. So again, we are so honored to stand here with you, NAREB, in our commitment to doing our part to bridge the Black homeownership gap so that now, more than ever, all Americans may stay safe and healthy from the comfort of our very own homes. Thank you, team.
Thank you. We appreciate those remarks for you and appreciate your partnership with the National Association of Real Estate Brokers. The next person I'd like to introduce is Mr. Dwight Alexander, Senior Vice President and Industry Outreach Representative for the Federal Home Loan Bank of San Francisco. At the Federal Home Loan Bank of San Francisco, Mr. Alexander is responsible for representing the bank before Congress, the White House, the Treasury Department, and bank regulators. Mr. Alexander.
Thank you, Derek, and to President Donnell Williams and Antoine, people who have been my partners. We at the Federal Home Loan Bank San Francisco are very pleased to be a continuing sponsor with NAREB and part of NAREB's, democracy and housing mission. Because for a long time, NAREB was one of few or the only voice that was in the space talking about Black home ownership and the need for Black home ownership. And when we partnered with NAREB some 20 years ago, working on democracy and housing and having been, one of the inaugural sponsors of the Sheba report and a continuing sponsor to this day, we're very proud of that work. We're very proud of the work that we've done in partnership with NAREB and not only just, providing dollars here and there, but really working with NAREB and being a partner with NAREB on some of its initiatives like the American Dream Down Payment Savings Plan and some other things, that President Williams talked about with the looking at specific policies addressed toward African Americans and not just saying, let's make sure we make home ownership opportunities available for everyone. But when the country, set in motion this system to create a middle class, the way it did such was by housing and housing policy. But it only limited that to a certain group of people, and Blacks by and large were left out of that conversation. And so now we need to begin to have that conversation. We need to begin to push those policies and those things which will bring about, a more equal distribution of home ownership and wealth in this country. And so at the Federal Home Loan Banks of San Francisco, we're pleased to continue to partner with organizations like NAREB and to David Dworkin, who I see there at Urban Institute, to make this not just a conversation about homeownership and Black homeownership, but really to put some legs to it, to put policy to it, and put policy initiatives. And, you know, Antoine and Donnell, we will be with you. And we're bringing the other federal home loan banks along with us. So thank you for your work. Thank you for your partnership and all that you continue to do in this space.
Thank you.
We definitely appreciate you and your organization's continued support to the Sheba platform and to our Sheba report. So we definitely want to thank you for that. The next person I would like to introduce is Mr. Ulysses Smith. Mr. Smith, in his role as Head of Diversity, Inclusion, and Belonging Leader at Blend, Ulysses Smith enables colleagues to integrate inclusion and belonging into their everyday practices and drives leaders to think critically about the impact of diversity in their business functions. Mr. Smith, have a few words for us?
Absolutely, and thank you for welcoming me here today. It is still morning for me, and I see San Francisco is getting some love in the chat, so thanks again for having me here. My name is Ulysses Smith. I am Blend's Head of Diversity, Inclusion, and Belonging. For those of you who may not be familiar with Blend, which is typically the case, Blend is a fintech or financial technology company based in San Francisco. Our mission is to bring simplicity and transparency into all of consumer banking and ultimately to create an accessible and equitable ecosystem. We currently have over 250 customers, including our largest ones, US Bank, Wells Fargo, et cetera, and help financial institutions process over $3.5 billion in loans a day. A little different from my colleagues who might have the same title at other organizations. My role is not only focused on the workforce, it's also very much focused on the impact of our product, particularly in marginalized communities. Echoing a lot of the comments that have been and the sentiments that have been made earlier today, Blend's our recognition as we see the tech sector under an additional microscope these days. It's our mission and understanding that it is no longer acceptable for us to continue to only look at treating symptoms of inequity throughout this ecosystem. We have an obligation to use our agency wherever possible to help address the root causes of inequity. And so we're extremely thrilled to be partnering with organizations like NAREB, the National Bankers Association, and Home Free USA as we launch our Equitable Ecosystem Initiative to help address a lot of these, not only through community partnerships, through our investment in our technology and providing our platform to minority depository institutions, and also through our regulatory engagement efforts where we will be focused on these root causes. So we appreciate all the work that you all are doing, and we are joining you side by side in this fight, which is going to be a very long fight, but I have all the confidence that we can get it all accomplished. So thanks again for inviting us here today.
You're quite welcome, and thank you for your support of the Sheba initiative. Our next partner that we have coming up is Ms. Joanne Gaskin. She is the Vice President of Scores and Analytics at FICO, where she oversees the FICO Scores regulatory practice and drives strategic direction of FICO's analytic solutions and partnerships, serving the mortgage industry in the capital market space. Ms. Gaskin, glad that you could join us.
Hey, thank you so much, Derek, and many thanks to the NAREB team in bringing focus, energy, and discussion to address the homeownership gap for communities of color. This is a really important issue, and I'm so pleased to be able to join you today to tell you a little bit more about what FICO has been doing with the NAREB team in order to help address this important issue. You know, at FICO, we've been forward investing and actively engaged in financial inclusion by building new credit models that use alternative data to aid in making credit available to the underserved, sometimes referred to as also credit invisible, as well as investing in financial literacy. And so I'm so pleased to have NAREB and NID as a partner in our financial literacy outreach. And so I'd like to spend a little bit of time just talking about that briefly so that folks are aware of what we're doing, because I think, you know, we are always looking for additional help and partners. So this year, the COVID pandemic really forced all of us to shift our priorities, is how we think about it. we're taking extra precautions for our health, to evolving how we work, and we're thinking differently and even more critically about every facet of our lives. Personal finances and credit health are no exception to that. So surveys that we've been conducting here at FICO at recent events across the country found that the vast majority of participants, over 88%, feel that the COVID pandemic has made it more important to understand the top factors that impact your FICO score and utilize resources such as credit or financial counseling in order to help you get to your personal objectives. So we think that's why FICO's Score a Better Future program, which is a series of free educational events across America to help U.S. citizens learn about credit scores and other financial tools, can help assist folks getting planning for access to home ownership. So each event focuses on helping consumers by explaining the key factors in the FICO score and providing one-on-one counseling from certified local not-for-profit counselors to help them with their individual health and goals. And this includes NID, which is the housing counseling arm of NAREB. So we're very pleased to be participating with them. And while the events, move from physical to virtual, we're still seeing that the impacts are very real. So 95% of the participants told us that the event offered the tools they needed to better manage their finances. And in particular, attendees valued working one-on-one with a credit counselor or coach to create a plan that's tailored to their specific needs. And I think the mortgage process is really complicated. And so the degree that we can connect the consumers with the counselors that have the right information to help them prepare is really critical. So FICO is really proud to bring localized community support to credit education, and we're incredibly grateful to NAREB for helping broaden our reach and impact. So if you'd like to learn more about what we're doing, please visit the Score a Better Future website. There's a ton of free educational materials that you can download and use. And again, thank you so much for allowing me to make a few comments together with you today and supporting the great cause. So thank you.
You're quite welcome. And thank you again for your support of Sheba and the national conversation on Black home ownership. Now, in the essence of time, we're going to move on to our second panel. I'd like to thank the members of our first panel for doing an excellent job in getting the information out to the people that we have here today on the call. But we have a just as good second panel, distinguished set of guests here. So I would like to introduce those folks on our second panel. We're going to start with Mr. Ray Crockett. Mr. Ray Crockett is a 14-year veteran of the National Football League, where he earned 2 Super Bowl rings with the Denver Broncos. Since retiring from the NFL, Ray has made several TV and film appearances and is currently the VP of Operations at Your Championship Tax Office in Dallas, Texas. Thank you for being with us today, Mr. Crockett.
Thank you. Thank you.
Yep. My next panelist is State Representative Jewel Jones, represents the 11th District of the Michigan State House of Representatives. After winning his election in 2016, he became the youngest state representative in Michigan's history. Welcome.
Thanks, brother.
All right. Next, we have Ms. Lynn Poole from the National Marketing Coordination for Rental Karma, an organization that provides a sustainable and simple way for renters to establish and build credit history by reporting their residential rent payments to major credit agencies. Welcome.
Thank you very much.
Next is Ms. Letitia Grant, a NAREB member and is the chair of the House in the Car National Association of Real Estate Brokers campaign under the 2,000,005 New Black Homeownership umbrella that focuses on increasing Black homeownership in communities that have large numbers of millennials and late Gen Xers that do not own homes. It's good to see you again, Ms. Grant.
Thank you. Thank you. Good evening, afternoon, everyone.
Welcome. Mr. Will Roundtree, the founder and principal of WE Management based in Las Vegas, Nevada. He has established himself as a staple in the real estate investment sector by assisting thousands of families to successfully restore credit to purchase property for the first time without a cosigner, and by helping over 1,500 businesses get access to over $300 million worth of funding. Welcome, Mr. Roundtree.
Thank you for having me. It's a pleasure.
My next panelist is Ms. Heather McGee. Ms. Heather McGee is a distinguished senior fellow at Demos, an inequality-focused think tank. After some television appearances that went viral, Starbucks founder Howard Schultz asked Attorney McGee to advise the company in crafting its anti-bias training for the 175,000 employees in the wake of the unjust arrest of 2 Black men in the Philadelphia area. Welcome, Ms. McGee. My next panelist is Ms. Stephanie Mash Sykes, and she is the founding executive director and general counsel of the African American Mayors Association, where she oversees the daily operations, policy agenda, and legal affairs of the AAMA. I would like to give a warm welcome to the Honorable Ms. Sykes. Last but not least is Mr. James Winston. Mr. Winston is the president of the National Association of Black-Owned Broadcasters, the only trade association representing the interests of African-American owners and African-American owners of radio and television stations across the country. Attorney Winston represents the NABOB before the U.S. Congress, the Federal Communications Commission, as well as before the executive branch agencies and the White House. Rounding up our group are 2 people very familiar to me and to you too. Ms. Michelle Calloway, the chairman of the board for the National Association of Real Estate Brokers, Mr. Antoine Thompson, our executive director, and our 31st president, Mr. Donnell Williams. I want to welcome all the panelists for joining us here today, and we're going to get started right away. My first question is, what did it mean to you when you purchased your first home, and how did it impact your life? I would first like to ask Ms. Poole that question. How did buying your first house impact your life?
Great. Thank you so much for giving me this opportunity to be a part of this panel and also to share my story. Well, my story begins 4 years ago. Through hard work and dedication, I positioned myself to come to the US to pursue my education. As you all can imagine, moving to a new country presents many challenges, such as adjusting to cultural norms, getting to know a new place, establishing new connections. And one challenge that I didn't anticipate was navigating a new financial system. Now, in speaking to other immigrants, this new financial system has proven to be one most difficult obstacle to overcome. Well, why is that? Now, being a credit ghost or being a credit ghost or being credit invisible makes it virtually impossible to be approved for a financial loan. One cannot get approved for a car loan, rental agreement, or even to get to finance any retail purchase. Now, that's all part of the experiences that I went through. One of the most embarrassing ones was being denied to purchase a new couch. Now, a lot changed. Specifically, I joined Rental Karma Family and quickly became educated about the opportunities anyone can utilize to establish or boost their non-existent or thin credit history. With just 4 months of rental history, I moved from credit invisible to the mid 600s. Later on, my colleague added me as an authorized user to one of the accounts, which helped me move up to mid 700s. Ultimately, this enabled my husband and I to start planning a new home build in March, and we closed in September. I'm now a homeowner with glowing credit. In the US, there's a lot of people, especially African Americans, more than 2 million African Americans with thin credit files. Our goal is to ensure that we have a thriving community, and that all should have the opportunity to achieve small things such as home ownership by improving their credit history and financial standing. I believe we all have an opportunity to shape the future. So I think that explains how excited I was from being a credit ghost to now being a homeowner. So thank you once again for allowing me to share my story.
Yes, that's a very impressive story. I'm glad that, congratulations on your home purchase.
Thank you.
That's a wonderful achievement. Ms. Sykes, how did purchasing your first house impact you?
Yeah, well, thank you so much for having me, and I'm happy to lean in on this question. We heard so many macro regulatory responses, and for me, this spoke a lot to me. It was bittersweet to buy my first home about 4 years ago, because when I look back, and all the steps that brought me to where I was to be able to buy a home, it was a combination of luck, privilege, and dashed with a little bit of consumer education. Here in the DMV, the DC, Maryland, Virginia area, homes are very expensive. And when I first purchased a home, I had a small child. I now have two. And what got me to that path was eliminating debt, but being fortunate enough to graduate from law school, even in 2009, at a really tough time when we talk about the housing crisis, but to maintain my employment that allowed me to pay off that six-figure debt from law school, to then build my credit to get to a place. And those are so many steps. Some were not within my control. And then I say, it was very sweet to get those keys. I had a partner to help with the income requirements, but it was also bitter. I had a small child, and your house and your zip code is tied so closely to schools. And when I looked at what schools what zip codes we could afford, unfortunately, they didn't always have the best schools. We were fortunate to be in an area that has good elementary schools. So we knew moving in that it would not be our forever home. So the dream looks a little bit different, but I am still privileged to participate at the level that I am. And where I am in my role as a director of a nonprofit, and where what I encourage everyone to do, if you have leadership, is to advocate that your teams and your staffs and your interns have livable wages, so that they can have that opportunity, even if they're working for advocacy organizations, even if they're, working even in private companies. Sometimes in these really expensive metropolitan areas, you don't have the opportunity to participate in home ownership and build wealth, and especially if you don't have parents that can put that down payment. So I am thankful for the friends and family members and mentors that were able to provide consumer education to guide my steps. But it really was, I was in my 30s, I was in my 20s, so I missed 10 years of appreciation, and that's going to impact my overall wealth accumulation in my life. But I do say it was, a really important moment in my life. And I hope that we're here today to talk about how other folks can also have that important moment in their lives as well.
Thank you for that answer. You touched on a lot of different issues there as far as student loan debt and people buying houses later in life. So I'm sure we're going to get to a lot of those in the chat, a lot of those questions, because a lot of people are in very similar circumstances. So we definitely need to touch on some of those subjects. Ms. McGee, you want to enlighten us with your response, how buying your first house impacted your life?
Sure. Thank you so much. And thank you all for being part of this conversation, nearly 700 people strong, on probably the most important economic policy issue facing our country right now, which is the security of our housing, and particularly the security of Black folks' housing. I am sitting in that house in the Bed-Stuy neighborhood in Brooklyn. I'm sorry, my computer was not able to get the beautiful conference room background that my co-panelists have on. It just didn't work. But I want to be very frank. At Demos, we have studied the racial wealth gap and how policy created it, which was, of course, the main topic of conversation of the first panel. But it's been very real in my life. I did everything you're supposed to do. I went to all the schools. I was extremely ambitious, became the head of a think tank at age 33, had a high six-figure income, had perfect credit. And yet, I was underwater, right? I was 6 figures underwater from that schooling because my family was not in an economic position to help me avoid going into debt to go to school, and they shouldn't have had to have been, right? Public college was debt-free back when it was white folks who were going to college. And when our student population became more diverse is when government started cutting back and shifting that burden onto students. So I'm only in this house because I married a man who had inherited wealth. He didn't have the income, he didn't have the credit score. I had the income and the credit score, all the things that were under my control, I was able to bring to the table. And then the things that were not under his control, he was able to bring to the table. So in some ways, we talk about this a lot in our family, the way that history shows up in your wallet and the way that you could do, everything right and play by all the rules and not have the benefit of something that happened way before you were even born, which is that his, South Asian immigrant ancestors and white ancestors were able to build wealth at a time when we were denied it. So, I think until America really understands the way that history shows up in your wallet, we're not going to have the public will for the kinds of reparative programs that are so necessary, especially given the wave of foreclosures that we are about to see.
Thank you. Thank you for the answer. I also would like to pose this question to Representative Jones. Could you weigh in on this topic?
Definitely. And thanks for inviting me and having me here today. I think it's no secret that, especially in communities like ours, we have a high rate of people who are renting. And in my hometown of Inkster, where we have just a whole lot of renters, I definitely want to figure out how to really get our footprint there. Not only myself, but some of my friends, my family, and some of my neighbors. And so the first home that I have purchased, and I was talking to Brother Antoine about some of this before at a convention that he had came to a while ago where I first met him. For me, it was an exciting time. It was almost like I was creating history for myself. I was able to do something that would put my family in a wonderful place, and not just my family that I know now, but future generations that will be coming after me. And then once I was able to do it, definitely my network of folks, a lot of people who are used to renting, whether it was apartments or wanted to stay in condos or townhouses, or who might have even been at home with their parents, we all kind of got together and started purchasing property so we can take back ownership of our communities, essentially. And so it's kind of spurred into a movement now where, the neighborhoods look nicer because we actually live here. We actually, cut the grass, we fix the yards, we have block parties, we have different events. It's really brought us all together. And so it was just a change of hearts and minds for me. And I was very excited about it. And it's actually right now I just moved into my second place, actually. A larger space, still in the neighborhood. And it just feels now like I'm almost like an OG. Of course, to many people on this call, you all are like the professionals and whatnot. So you know exactly what you're doing. But I'm hanging pictures up and stuff right now. I feel like it's an exciting time whenever you move into a place and you can say that you own it. And I think that's such an important thing for us to get the young people to think about right now, because the earlier that you do it, the better off you'll be in terms of turning it into a business or being able to take care of your family. I think we all fall on hard times quite often. I had family in 2018 where I got evicted. And it put me kind of in a slump because we had to take care of, we had to reconsolidate different spaces. We had to figure out how we were going to, make the situation different. Had I already been on the home ownership piece then, maybe I would have had a house or two that I could have made available for, to put people in. And so I think the more that we talk about ownership and taking back control of our communities, the better off we would be. And so it was just a very happy time for me. I'm looking to learn more. It's been difficult too. I think one of the sisters on the call earlier was talking about credit. And for me, as a young person, I joined the Army years ago and I went out of the country and my credit was shot because Bank of America didn't want to work with me. while I was gone in terms of trying to figure out how to pay these bills. And I got back, closed out my credit line, and my credit was bad for a very long time. And so a lot of things I was doing was just in cash. And so I think even when we talk more about financial literacy and empowerment, this is just important conversation to have. So I applaud you all for hosting this and for doing the work that you're doing. And I hope that we can get more people in the knowledge of this.
Yeah, thank you for that. You're doing a good job. You not only bought your first house, you bought a second house, so that's to be commended. So congratulations on that. Miss Grant, Miss Letitia Grant, you want to talk about that? I know you have a lot of testimonials from your webinars and your podcasts. I don't know if you want to share one of those, or you want to share your own story.
Well, I am excited that I am able to actually answer this question, because as many of you may already know, we do host Homeownership Changed My Life, and we are so super proud of homeownership. But I am going to give a personal testimony. I am from a family. My mom tells us we didn't know that we were poor, but there's one thing that my grandfather believed in, and he believed in homeownership. So when my grandfather came to Houston, he actually believed very strongly in purchasing property. So he purchased property, and one of the properties he purchased was a daycare facility, what he thought was going to be for my grandmother. So I have been a homeowner since the age of 14, where he placed the home in my name. And with that, I talk about how homeownership changed my life. With having home ownership since the age of 14, I was able to leverage that home. And when I graduated from college, I had about $12,000 in student loans. And I know that's not a lot of money in student loans, but I was fortunate enough to work for many companies that actually paid for my college. They reimbursed me. But I was able to leverage that home and pay for my college. I was also able to leverage that home and refinance to do improvements that was needed, because the home was built in 1950. So for me, home ownership changed my life in a magnificent way. It also allowed me to qualify and purchase my second home with ease. So when I talk to my clients and when I talk to the individuals on Homeownership Changed My Life, or even the individuals on Millennial Talk Tuesday, I let them know your first home does not have to be your dream home. Just make that purchase. Then equity will come. And that equity is what we can use to leverage our lives. Thank you, Derek.
Thank you for the answer, because that is very true. The first home you buy does not have to be your last home. That could be a starting point for you. So a lot of people need to hear that. The last person we're going to have speak on this subject is Mr. Roundtree. Can you give us your testimonial there on how buying your first house impacted your life?
Absolutely. Again, first of all, thank you guys for having me. Tons of people in the chat, and I think this is a discussion and a topic that I think we need to have more dialogue on, because, you know, being from Milwaukee, Wisconsin, where less than 17% of Blacks own homes. I mean, it was something that I never would have imagined. Growing up, we didn't talk about financial literacy. I didn't know what credit was until my mid to late 20s. And I remember prior to moving to Las Vegas in 2005, I had a mentor who taught me. He said, "Will, eventually credit will become the new dollar." Didn't know what he meant by that at the time, but I quickly found out once I did move to Las Vegas, because I couldn't get approved for anything. And so I just took it upon myself really just to learn as much as I could about credit. And, you know, through just, you know, trial and error and finding out the importance of credit, in 2013, I was able to buy my first home. Again, something that, you know, most of my peers, most of, you know, the young adults in my age bracket within my family, we're not in position to do so, because again, this is something that we were not taught growing up. We were not taught in our households. We weren't taught in schools. And so from that standpoint, I wanted to make it my mission and passion to go out and teach and educate as many people about home ownership, because like someone else mentioned, one of the other panelists, is that, you know, our home really is the start of creating that wealth. You know, they say, you know, most successful individuals have some form of real estate within their wealth portfolio. And I just think that because we're not being taught this at a younger age, it makes it a little bit more difficult, because by the time we get to, you know, a young adult age, we're not in position. And then because it could pose hurdles in being in position to purchase your first home, I think that a lot of us just give up. And so by, having dialogues like this, I've actually traveled the country over the past 3 years, going from city to city, really teaching and doing free workshops, trying to educate people, one, just how simple it is. I think that people think that purchasing a home is extremely difficult. And I often tell people, at one point, it's actually easier to get qualified for a home than a credit card. But because we just hear, the amount of the purchase price of the actual property, we assume that it's out of our reach. And yeah, it does take a little bit of discipline. It does take a little bit of, patience, but with the right information, I think that's what, panels like this would be able to provide. I'm now, an investor of properties, having over 17 properties. And then now I'm looking back to 2005, I never even imagined having one. So it's definitely been a blessing for me and my family. It's been a change in the trajectory for, my family, my children's children. And I just appreciate that we are all having this dialogue, because I think it is something that we do not talk strongly enough, at least within the communities that, I do get an opportunity to go out and speak to. So I'm extremely excited to continue this dialogue.
I think your answer is the perfect segue to our next question about how people believe how difficult it is to purchase a home. So our next question is, according to data from Freddie Mac, there are over 3 million mortgage-ready Black Americans in the U.S. What should government, business, faith-based, and community leaders do to motivate and educate them to successfully pursue the American dream of home ownership? I would like to start this question with Mr. Crockett. If you can answer that question for us, we appreciate it.
Well, for one, I'd like to say thank you guys for having me here. It's a pleasure to listen to everyone and to get so much knowledge. It's just, I always tell people all the time, if you're the smartest person in the room, you're in the wrong room. So I'm glad I'm here to hear all of this knowledge. But I wanted to echo a little bit first and foremost before I got to that question about the buying your first home, because for me it was a difficult transition, simply because playing football in college and going to the NFL, being fortunate enough to go to the NFL, our schedules were so tight in college that a lot of athletes don't get to learn about the finances and things that other people at our age are learning because they're experiencing it. We're always on such a tight schedule. And my first home actually taught me a couple of things. For one, it taught me about credit because, of course, coming out of college, I didn't have credit. And some of us back, I'm 53. I'm very happy and proud of my age. But back then, a lot of our parents used our credit in high school and college to acquire different things and to stay afloat because it was so difficult. So a lot of us came out with bad credit, not even knowing we had bad credit. And I feel there was two ways that they tried to exclude us back then. One was with the higher raised credit score, so you couldn't qualify for a lot of these different programs to buy homes. And then the other one was with the higher down payment if you didn't have the credit. So it's like it was a double-edged sword. Okay, you don't have the credit, but you can pay more money. Well, how do I get more money if I didn't have the credit? So I felt there was two ways they excluded us. So it made me learn about, one, what I valued, because back then it was easier to get a car than it was to get a house. And why was that? Was because our communities, that's what you saw. The first thing was, I get money, I want to buy a Mercedes. It wasn't I want to buy a house. It was I want to buy a car, because we were visual people in our community. So now I'm just glad that it's transitioning now to where I see a lot of people that are concerned with credit. And I tell my guys that I mentor, my young players, don't just give your family money like I did. Check their credit. Start out by creating their credit and making sure that their credit is right, because through that, they can go out and use other people's money and won't have to use your money if the credit is right. We would go about it the wrong way. We would give them money first and not credit. And their credit was bad, so they would spend the money, so they keep coming back. So now it's time to change that philosophy. And I see a lot of my mentees are changing that philosophy, and they're going into their people and saying, hey, let's get your credit right so that you can go and not only buy homes, but possibly get a business as well. So that's what I would do. When you say now to the question as far as what can they do, I think it's all about, first and foremost, letting us know what we should value or helping us to see what we should value. I mean, there with the social media age, you're going to see a lot of people, they're putting things out there. Most of the time, it's always cars, it's always watches, it's always stuff like that. We need to change that and start showing our homes. Regardless, like you guys said, my first home was $90,000. It was a $90,000 home. It wasn't something I plan on staying in forever. But you know, the stigma of athletes is when you get in, you're all rich. That wasn't the case. I had a $90,000 signing bonus. So I had to make a decision. What was my value? Was I going to go out and buy a Mercedes so I could drive around and look like a professional athlete? Or was I going to buy a $90,000 home and feel like a professional athlete? And I chose the $90,000 home, and I've since then bought several homes. But that is the key, I think, is we should start off first off letting people know the value system. Don't go by what you see on social media and what people are using as valuable and important. Go by what you feel and go by what you know. And that is, first and foremost, get your credit right, because your credit will be able to not only catapult you into a home, but into businesses. And using that favorite word, I tell people all the time, my favorite phrase is other people's money. Use their money to invest and use their money to do things that you would do, and then you can get everything that you want. So that's what I would do if I was in the community and with these guys. I would first of all put the value system out there, show them what they should value, and then go about telling them how they can get it for the cheapest dollar. Get your credit right, because people will tell you, hey, just put more down. No, just wait. Get your credit right. Put less down, because that's more that you can do other things with as far as building a business for your family and things of that nature.
But that's great, man. Mr. Jackson, if I can just use a little presidential privilege here.
Of course, sir.
Mr. Crockett, I brought to the table an entire program called HouseThenTheCar.com. So it just reiterates and emphasizes what you just said, sir. So we are excited that we're on the same wavelength here, you and the National Association of Real Estate Brokers. And we have been preaching this, social media shows and what have you, websites, HouseThenTheCar.com, where people can find a resource. We've been preaching that. So yeah, I thank you for saying it, because maybe somebody will hear you when they don't hear me sometimes. Thank you.
Thank you, President Williams. Yeah, HTTC, our acronym, has been very successful, and I think we're getting the word out on that subject. I would like to pose this question to Ms. McGee. What can government, business, faith-based community leaders do to motivate and educate them successfully to pursue the American homeowners, to pursue the American dream?
Well, I think the first thing we've got to do is get this pandemic under control, right? Because we are having this conversation, and sometimes we have moments, particularly brought in by our friends in the audience on the chat, that is, in 3 months, in 6 months, if Congress doesn't do more to get the pandemic under control and to give relief to homeowners and to renters, we are going to be starting from, millions fewer homeowners, even than that Freddie Mac data that you were talking about. So that's the first thing we have to do. And then I would say on day one, the Secretary of Education has the authority to cancel and modify hundreds of millions of dollars in student loan debt. And that's one of the most important things that we can do to free a generation that never should have been saddled with so much debt. It is no way to run a country, no way to build a middle class, and certainly is no way to build a Black middle class. And that needs to happen on day one, is that we need to get out from underneath this student loan debt. And then finally, I do think we need to look at what goes into the credit score and, break open that black box and make sure that when these racial disparities continue to exist, that might mean that there's something wrong with the formula and not just something wrong with Black and brown people and our wallets. Now, I think you're saying that also there are still 3 million people who are ready to go, and their debt to income ratios are fine and their credit scores are fine. And that is wonderful. But one of the most important things we need to do is to get rid of single family zoning that is restricting the supply of homes and affordable apartments across our country. We need a building boom of affordable housing. And so that will also help.
Thank you. I think that's been echoed here today with the zoning issues. That's something that's being highlighted that I don't think we brought to the table before. Dr. Perry, our esteemed author of the Sheba Report, I know you have the statistics and the data to tell us how the 3 million ready-made Black American millennials can purchase a house, or what can we do to motivate them to purchase a house?
Well, I think that Ms. McGee just made a really, really important point about the supply, and others have made it as well. So one of the things that is pointed out in the report is that it turns out that the Black population, and particularly places where the Black homeownership rate is lower, happens to be some of the more expensive areas in the country. And so that's also sort of a supply side issue that we need to think about. And it means that we definitely need more affordable housing. And when we say affordable housing, people, often you talk to, and as I don't talk to people as much as you all do, I'm sure, on the ground, and you say affordable and they're thinking, oh, something under $200,000. No, in many of these cities, we're talking about something that's $850. And that's a big deal. But I also think, and I'm going to play devil's advocate for a second, I think people are smarter about the benefits of homeownership than we might give them credit for. I think that people are well aware of the cost and risks of homeownership. And I want to underscore risks because millennials in particular, they can remember the subprime mortgage crisis, and they can remember the meltdowns and the foreclosures and the displacement and the loss of home equity. And so they know that these problems were due to irresponsible lenders and to fraud and to poor regulation and to a housing finance market structure that was set up to take advantage of people. That was covered very thoroughly in the popular media. So people are well aware of that. And so what we've got to do, in addition to helping educate people about the mechanics of being able to qualify for a mortgage, we've got to help people understand how the entire system works and try to help reassure them and build confidence that what happened in the 2008 crisis is not going to happen again, and that there are protections in place to make sure that those kinds of things don't happen again. So,
yes. Thank you for that answer. Our final question is, what role can elected officials, sports figures, celebrities, and social media influencers and the press play in shaping the narrative on the importance and benefits of homeownership in Black America? I would like to start this one with Ms. Sykes, if she can weigh in on that.
Sure, thank you. So I lead the African American Mayors Association. There are about 500 Black mayors in the country of all city sizes, from a couple hundred to over 2 million. And so what some of the things the mayors are doing, whether it's coming together in coalitions, there's the mayors and CEOs for housing investment, which partners in each city. There's a headquartered, a large company, spearheaded with the late Bernard Tyson and Kaiser, to really come together to make those local investments. Mayors are also being innovators, whether it's, talking about the zoning and allowing for accessory dwelling units in really high cost areas. And also they're encouraging innovation, whether it's through tech coding and all these different, innovative opportunities to get young thought leaders on these problems. And they're also scrutinizing technology because, maybe in some cities, Airbnb provides extra income. Maybe in other cities, it's increasing prices. So we really have to encourage innovation, but we also have to make sure that innovation isn't looking at our communities or it had the effect on our communities of a disparate impact. And also, I think there's just this moment to be a local representative for savings and consumer education. Mayors get to be the local conveners and to really have a trusted voice. More so than a celebrity, you can trust your mayor. And so mayors can lead this moment in making sure community members also are aware. There's an awareness gap of home ownership programs, down payment programs, and mayors can really lead in that conversation. And lastly, home ownership does not exist in a vacuum. It is part of a comprehensive wealth disparity issue that we talked about at the top of the 2 hours. There are mayors that are leading universal basic income programs to allow people who are in their homes, stay in their homes. Mayors are looking at tax abatements or grandfathering and tax programs, particularly in metropolitan areas where you see housing prices going up and older homeowners not being able to stay in their homes. Also, I think there also needs to be this idea, while they're not, we've talked about intergenerational wealth a little bit. And while we know that there's been historical problems in the Black community in transferring wealth and land and homes, to the extent that there are those transfers, there's lack of legal counsel to establish wills, to make sure that the titles are transferred. I'm sure everyone who's listening today may have that aunt or uncle that left a house, or grandfather that left a house to 5 different people. Someone didn't pay the taxes and it went to foreclosure. So there's some opportunities that we're also missing in our community. And I think, when you look to local leaders, they're really great in understanding the local needs. And it might not be millennials are eating avocado toast. It might be the millennials are at a really difficult time right now and they want to buy homes. But maybe that can be an incentive to keep your college educated population in your community, to have some home ownership assistance for graduation. So there's a lot of things that I think local leaders can do. And I think it's an exciting time, although it'll be a challenging time as we come through COVID. It's also a great opportunity while we're home to provide education opportunities for those who are seeking homes in the next few years.
Yes, those are some really great solutions. Thank you for that. I'd like to pose that question to Mr. Winston. You want to weigh in on this question?
Certainly, I'm happy to. First of all, thank you for inviting me to be on the panel today. I'm very happy to be here. It's been very educational to me. I've learned a great deal during the panel. And the interesting thing that I'm thinking about as I'm listening to all this is it needs to be broader. This information needs to be made more broadly available, which is where the media comes in. My members are owners of radio stations and television stations around the country, and we frequently have programs where we're, public service programs where we invite people to come in and speak on our stations, and this is exactly the kind of information that local people need. We see here you're talking about educating people about credit, educating people about home ownership. And getting that word out is what these shows are designed for. Obviously, our radio stations have local air personalities, national air personalities. This is the kind of subject that they can sprinkle into a discussion of this into an ordinary program without even breaking into a whole new segment. Just talk briefly about it, invite someone from NAREB or someone else to come in and the young lady was just talking, Ms. Sykes was talking about mayors, and somebody else mentioned that oftentimes government leaders don't know what they should be doing. And I think oftentimes we have elected officials invited to come on the air, and they need to be primed beforehand. And when you come on the air, let's talk about home ownership. So I think there's a natural connection here that's possible between the media and getting people educated about what we're trying to do here. So I look forward to being helpful in maybe making some of those connections going forward.
Thank you for that. Ms. Letitia Grant, I pose to you the same question.
Sure. Thank you, Derek. So first of all, 90.4% of our millennials are on social media. And they spend about 2 hours a day on social media. So the question is, what can social media influencers, sports figures, celebrities do to help spread the message about home ownership? And it's just this simple. Post about it, talk about it, be about it. If they're already on social media, you already have captivated their minds and their attention. When a new restaurant launches here in Houston, we no longer rely on the news to report it. We rely on social media to tell us where that new restaurant is, and we rely on our sphere of influence to tell us if the food is good or not. Same thing with home ownership. It needs to be conversation every day, all day. It needs to be regular conversation. We don't need to come up with a big hoopla about what to do and how to do it. Just plant the seed, and our millennials will do the research and they will fulfill the mission of home ownership. So guys, if you are on social media, if you are a celebrity, talk about the importance of home ownership, because that's the missing piece. We hear about the fear, but we don't hear about the importance.
Thank you, Letitia. That's very informative. We also had Dr. Buster Soares join us. Dr. Soares, were you able to hear the question? If you could weigh in for me, I greatly appreciate it. No, I was told that he came back. If not, we're going to move on. I'm going to ask Mr. Crockett, what can elected officials, sports figures, celebrities, social media influencers, and the press play in shaping the narrative and the importance of home ownership in the Black community?
Well, I agree with the panelists that we just had as far as the social media issue, because that is where all the millennials are getting their information. I have two young sons that's 20 and 26, and they're on social media every day, all day. And I think it really begins when you start to reach back, not just the celebrity themselves, but with their families and their friends, because at the end of the day, most of the time, the celebrity themselves, if I'm putting my house out or somebody else is putting their house out, it can distract the normal person who's looking, because you look at those homes, you say, I can't afford those homes or whatever. They're just showing off. But most of the celebrities have bought many, many, many homes for their family members, whether it's their mom, whether it's their brother, whether it's their sister. Post those things. Because most of the time, like myself, I just use myself. I bought my little sister a home when she was in college and she graduated. It was like a $100,000 home at the time, which back then, was a very nice home. But at the end of the day, it was her home. So with me being able to post that, showing that not only am I doing something for myself, being a professional athlete, but when you reach back and you show that there's ways and there's different levels to this game. Not everybody has a $2-3 million house, $1 million house, or whatever. A lot of people have $200,000 houses, $300,000 houses, $150,000 houses. Those are the homes that you need to show, and those are the ways. How did I go about doing this? Well, first and foremost, it always starts with credit. I keep putting credit out there because my credit was horrible when I came out of high school, and when I came out of college, not knowing why. But then I had to learn the game of what credit really does and how it really can exclude you from being in the conversation in a lot of different places. So I speak highly about credit, about making sure you understand it first and foremost. Like myself, I'll never forget. This is recently, just say 10 years ago. When we got into the league, the first thing we started to think about is, I don't want to owe nobody anything. I don't, I got money now. I'm all cash. I'm cashing everywhere. Everywhere I went, I'm paying cash because my cars were cashed out. My house was cashed out. I didn't want to owe anybody anything. Well, that's the wrong narrative. That's the wrong way to go about it. It's the smart way. It's not about what you owe. It's how you owe and who you owe. So it's about how to go about doing it the smart way and how to go about using other people's money, the bank's money, and other loans and things of that nature to get what you want, but to make sure what you're getting has value. That's the one thing that I had, I guess the hardest misconception with some of my players is they wanted to get the depreciating factors, all the things that depreciate. And I had to really explain to them that it's okay to go out and get a loan, but make sure whatever you bought with that loan has value and can increase in value, not decrease in value. So that's where the important part of home ownership comes from. That's when you start to think about home ownership is still one of the things that can really get value, that can really appreciate, that can really get you the type of value where you can go in and leverage that home. That it's one of the things that you can still do that with, even though it's a little more difficult because of the time, but it still is there and the opportunity is still there. It's about where you get the home and how you purchase the home. So I feel that the education part of it is what we really must do as a celebrity and as government officials in the community and things of that nature. And then the sewing, we are a sightsee nation. I mean, that's why every infomercial you see, what's the first thing you see? Bugatti, Ferraris. They always show it because they know we are visual people. So I agree with the first panelist by saying we need to show more of what, as celebrities, we're doing, not only for ourselves, but for our family members and for our friends, how we've taught them about credit and how we've taught them to get into homes that they can afford on the level that they're on.
I'd like to thank everyone. Everyone gave great answers and great solutions. All our panelists, the first and the second panel. So I just want to give kudos to you and thank you for participating. We want you to stay put, not go anywhere. We have our executive director, Mr. Antoine Thompson, who will be fielding questions from the chat. Mr. Thompson.
Thank you. Dynamic panel. Clearly, everyone's showing that Black homeownership does matter. I want to go to the Ms. McGee. I have a question for you and one other panelist, and to State Rep Jones. Ms. McGee, the HEROES Act, which is supposed to provide mortgage relief. What's your opinion on that? Does that need to be a day one priority for whoever becomes the next president to provide mortgage or rental relief to struggling homeowners and renters affected by COVID-19? What's your take on that?
Well, thank you so much for asking that question. Absolutely. You know, folks, I'm sure many folks in this call know, but Congress was able to pass the CARES Act right away at the beginning of the pandemic. Obviously the most famous part of that were the $1,200 payments and the $600 unemployment insurance. But there was a lot in there that helped create a foreclosure moratorium and rental assistance and rental and eviction moratorium. That is all expired. And the Democratic Congress passed what is called the HEROES Act, which is a revived version of the CARES Act in June. Or July, and it has just been sitting on Mitch McConnell's desk. And the head of the Senate, Mitch McConnell, has just recessed the Senate until November 9th. And so it is clear that there's going to be no more assistance for the American people on the pandemic and its economic effects until after the election. So it's very important. It's also very important that we do a racial equity analysis of the HEROES Act, because there were some provisions in the CARES Act that made it much easier for homeowners to have relief than for renters to have relief. And of course, because of the divide that we're talking about today, that meant that it was much easier for white people to get relief in their housing situations and their housing stress than for people of color too. So we've really got to make sure that every single thing that we do, we are using as much of a racial lens as was used to deny us property and to deny us wealth. We've got to put that lens back on to make sure that we are building equitably towards the future. But absolutely, if we don't have the relief of the HEROES Act, as soon as humanly possible, we are going to be looking at much worse numbers than we have even from the last quarter.
The next question is for Mr. Jones. I think he may have stepped away. Mr. Jones, I know that you have been very involved with investment property. There's been some discussion about places like Michigan, Detroit, Buffalo, Baltimore, Cleveland, parts of Newark, 203K program. If you could talk about the importance of that program, but also make it more competitive and reforming it so that homeowners and investors can use that as a tool to put more properties back on the rolls for people.
Definitely. So I'm not super familiar with some of the ones that you mentioned, but I know I can speak about the one that we did even here. So we had created a neighborhood stabilization program a few years ago to get some of those houses back on the tax roll, that were foreclosed homes or things of that nature. And what that did for us, a lot of homes were, set to get on the demo list, or were just abandoned properties that nobody was doing anything with, when we were talking about trying to rebuild our community. And when we started these kind of programs, what you've seen was we have developers coming to the neighborhood. We had given them a bundle of homes, for example, from grade A homes, grade B homes, grade C homes, grade D homes, for example, bundle them up, give it to them, give them a time limit to get them fixed up before the city would take them back. And so for us, what this did was it allowed us to get these back on the tax rolls, allowed us to get people back into homes, and allowed us to basically put a facelift on the community. The thing that I would say we definitely have to improve on, though, is being able to give people an opportunity to participate in the program. Because when we first started off, there were different conditions that, for example, like you need to have $250,000 liquid to participate in the program. And so, of course, a lot of people were barred from entering. And so what we began to do was provide, subcontract opportunities to different individuals. But when we talk about new opportunities coming in, I think that even the question earlier, where they're talking about what certain people who are in positions of power have to do, we just have to advocate and speak up more. A lot of times when I'm in front of the community, or I'm in front of someone, I can bring up Black home ownership. I can bring up, transitioning people from housing projects into a home ownership program so we can, fix some of these things in our community. And just simply, raising our voice in some of these rooms and in some of these areas will spark a conversation for us to figure out how do we go ahead and get our everyday person into a position where they can purchase a home, where they can purchase property, even if their credit score is low, or if they don't have the financial resources, or they're not knowledgeable about how to get into real estate. And so the biggest thing I think, is just speaking up and demanding more from our leaders. And the moment that we do that, I'm even talking to one of my sisters who's on the call, who works at Quicken. A lot of people just have to be called out, and you had to call them out in front of people. And so when we do that and we say that, hey, this is what we need to do in our communities, and you do it in a public forum or even on a call like this, of course, we don't have to talk about you all because you're all doing a fantastic job. But if you were doing something bad, we could talk about it because this is a platform now that we have. And it's many people going through the same issues. And so that's all I think we have to do is just keep having these conversations and have it in a way that now it's 506 people on this call that I see. We all have to go and talk to our neighbors in the area now, figure out who's renting homes in the neighborhood or who would like to transition into owning a home. And now we can connect them to resources that's available through programs like this.
Thank you. I'm going to turn it back over to Derek Jackson. Before I do that, I want to just say one quick stat for you all. In the 2020 State of Housing Black America report, we identified the top lenders to Black people from 2019. And out of those top 10 lenders, they did 24% of all mortgages to Blacks in 2019. And of those, only 3 of them are traditional banks. So all the others are either credit unions or mortgage companies. So we have a lot of work to make sure that those depository institutions are lending to Black people. Mr. Jackson, the floor is yours.
Thank you for that, Mr. Thompson. I just want to reiterate that the State of Housing Black America report is a resource for everyone. So everyone on the call, we're going to show the text number again very shortly, so you can text and get the executive summary, so you can reference what Mr. Thompson is talking about. And just in wrapping up the second panel, I think the panelists provided a bunch of great solutions. There's topics that weren't talked about in the first panel: zoning, student debt, credit. So I think the people that were on this call really have a few takeaways they can go home and tell their loved ones in their respective communities. So I want to thank all the panelists for being on today, and I look forward to seeing you all soon. My next duty I have here today is to introduce another one of our partners, Mr. Kimani S. Little. He is the Government Relations Officer for the Federal Home Loan Bank of New York. He brings to this role nearly 2 decades of public service and experience in the intersection of housing and banking. Mr. Little, can you provide a few words for us?
Can you all hear me now?
We can hear you loud and clear, sir.
Fantastic. Well, Kimani Little, so nice to be with you. I'm with the Federal Home Loan Bank of New York as our Government Relations Officer. We are proud to partner with NAREB and proud to be a partner with the effort to increase Black home ownership. And on a personal level, I'm actually the son of a longtime member, the Atlanta chapter of NAREB. So it's an absolute pleasure to be with you all today. The Federal Home Loan Bank, you heard from one of my colleagues, Dwight Alexander, the Federal Home Loan Bank in San Francisco. I'm with the New York Bank. We are 11 regionally sponsored member-owned cooperatives that lend to banks and credit unions to help support housing finance, mortgage lending, and community and economic development. We are basically a bank for banks. Since 1990, the Federal Home Loan Banks have supported our members and our communities through an affordable housing program that encourages home purchases. At the Home Loan Bank in New York, we're especially proud of our grant program that helps make down payment and closing cost assistance widely available to households making the jump into home ownership. At the New York Bank, we have a program called the Homebuyer Dream Program that provides up to $15,000 for eligible first-time home buyers. The grant program is geared towards middle-class buyers with incomes at or below 80% of area median income. The program also requires financial counseling, homeownership financial counseling, so that helps to ensure that these first-time home buyers can actually stay in the homes that they purchase. We're proud to say that the New York Bank funded the program this year at $12 million, and over the life of our programs, we've actually provided close to $140 million in grants to help more than 17,000 households to become homeowners. As realtists, I would encourage you all to become more familiar with the Federal Home Loan Bank housing programs and to create business relationships with the banks and credit unions, specifically their mortgage lending officers at these banks and credit unions that are members of the Federal Home Loan Banks, like the Home Loan Bank in New York. In the New York district, which covers New York, New Jersey, Puerto Rico, and the US Virgin Islands, over 100 separate banks and credit unions participate in our Home Buyer Dream program. As a real estate professional, you can guide a client to a bank that has a program that can provide thousands of dollars in home purchase assistance. That's an absolute win-win for everyone. And by taking advantage of these programs, you can help to close the Black homeownership gap, build wealth, and secure the financial future of our communities. For realtors that are based in New York, New Jersey, Puerto Rico, US Virgin Islands, you can go to fhlbny.com for more information on the New York program. For those of you that are in other parts of the country, you can learn more about the home loan bank that serves your state at fhlbanks.com. Thank you so much for your time. Thank you for letting me be a part of this conversation, and congratulations again on holding such a wonderful event.
Again, thank you for your support, your long-term support of the Shiva Project. And for those people that are still in the call here, I think he just said there's up to $15,000 worth of assistance. So that's a tidbit of information that you can tell the people that had to jump off that you got here staying on the call. So this is an added bonus. So we thank you for that and definitely appreciate that. My next partner that I would like to introduce to NAREB is Ms. Phoenix Jackson of Rental Karma. Phoenix Jackson is the Chief Marketing Officer for Rental Karma. In her role, she trains, creates, and executes strategic communication plans and effectively keeps Rental Karma's initiatives and products and services ahead of the curve, relevant and adaptive to its target audience and consumer base. Ms. Jackson, thank you for joining us here today. Would you like to share a few words?
Yes, thank you so much. Again, I'm the Chief Communications Officer over at Rental Karma, and we are a new partner of NAREB. I am so excited to be here. This is such a refreshing conversation, and I just thank you all for being people who are on the front line, who are handling not only, this issue, but all of the micro issues that go around Black home ownership. So we're here to talk about, not just the issue, but also solutions. And for all of you who are not aware, did you guys know that you could use your rental history on your credit report? Yeah, I didn't know that either some years ago. So one of the practical solutions that we've come up with is to actually prepare not only millennials, but elders as well as young people to prepare them for home ownership is using their rental history on their credit report, your past history or your current history. We've already assisted over 57,000 individuals in just this initiative alone across the country. And I don't know if you all are aware, but there are over 109 million renters right here in America. That's almost a third of our population. And there are over 2 million Black individuals who do not have any access to credit. So our service is, one that's very unique. It's one of its kind. And we are not just, pushing people down the pike of homeownership. We have provided a very practical solution to assist families and individuals in boosting their credit score so they can actually get to that threshold or over that threshold so that they can become homeowners. If you guys want more information, you can all look at our website at rentalkarma.com. That's rental, KHARMA.com. We are working diligently to build partnerships like the one here with NAREB across the country so that we can help even more individuals and more families to prepare them for those next steps down the pipeline into home ownership. And again, thank you guys for your time. Thank you for the work that you all provide. It is extremely exciting. And I love the idea that myself as a millennial, as well as my CEO and many others on our team, that we are relying on social enterprise and private industry to also participate in making the change that's necessary for people of color around this country. And I thank you all for, offering for us to be here today. And we look forward to doing more work with NAREB in the future. Thank you.
Thank you. You're quite welcome. We definitely appreciate your support. And I would like to thank again all the partners and panelists that made today possible. It's been a great event. It's not quite over yet. We have our remarks from our illustrious president. And again, thank all the partners. And this would not have been possible without the commitment and your participation. So we really want to thank you. And I'd like to bring to you again the 31st president of the National Association of Real Estate Brokers, Mr. Donnell Williams.
Thank you, Derek. In August of 2019, I stepped into this role as president with a plan, with purpose, and an aggressive agenda. I ordered a cease and desist and waged a war on the decline of Black home ownership. I rallied my troops and boldly led the march forward with cutting-edge initiatives, strategies, and tactics designed to arm every age group and geographic market with vital information and resources that will assist them with achieving the American dream of home ownership. At the onset, the national Black home ownership, when I took office, the rate was at its lowest since the passing of the Fair Housing legislation in 1968. I am proud to say that as of the second quarter of 2020, the rate was 47%. Today, this morning, breaking news, because the U.S. Census data was released this morning and the Black homeownership rate has dipped for the first time in 5 quarters. So we're not quite at 47%. We're at 46.4, 46.6. We're not that far off, but we edged off a little bit, but that's to be considered with the pandemic. So we cannot rest on our laurels. We cannot be content nor complacent. The year 2020 is one that will be remembered in history forever. And we want the upward trend of Black wealth building and Black home ownership to remain a part of this historic narrative. But it won't happen by chance. We have to put things in place. It will take the continued and collective efforts of NAREB, other associations, churches, community groups, lodges, frats, sororities, chapters, CEOs from Main Street to Wall Street, from Park Avenue to Martin Luther King Boulevard, and you to move the needle in a positive direction. It will also take everyone over the age of 18 to exercise their right to vote in the upcoming election. We must use our voices to remove ineffective elected officials by replacing them with the leaders who understand our needs and who will follow through with their actions. We pray that this event reinforced some knowledge that you already had, provided you with some information that you didn't know, and sparked a fire within you to do more to help us reach our goal of increasing Black home ownership. But please, don't keep this information to yourself. It does no good. It does little good there. It can do more good and continue if you continue this dialogue by hosting your own conversations at the dinner table, the birthday party, the boardroom, the barbershop, the beauty shop, your church group, your lodge, and beyond, because we all have a long way to go. We know you learned a lot and took good notes, at least I did. But we invite you to further arm and equip yourself with more amazing information, data, and facts provided today by downloading a copy of the executive summary of the 2020 State of Housing SHEBA report. And the actual SHEBA report is ready for distribution right now. You may do so by texting SHEBA, that's SHIBA, State of Housing in Black America, to this number, 31996. Text SHEBA, SHIBA, to 31996. Another way to learn more about us and our upcoming national events is this. We have a NAREB Realtist Rundown regarding real estate opportunities for seasoned individuals. Tax exemptions, the bad words they don't want to talk about, reverse mortgages, probate, wills, trust, life insurance, you know the bad words we don't want to talk about in our community. We also have an NAREB Mortgage Servicers Conference coming up on November 12th. We need to talk about the future. We also have NAREB Growing Black Homeownership Town Hall coming up on the 19th. We also will be introducing our auction site. We will also be introducing our relationship with the referral company. We are impacting America here, folks, and thank you for being a part. We are continuing to build our army, and we need you. Please connect with us by visiting us online at nareb.com. You can tap in also on Voice of Black Real Estate on Facebook and what have you. You can also follow housethenthecar.com on Facebook. Please like, engage with, and follow us on our various and social media platforms that are displayed on the screen. And last but certainly not least, please join us as often as you can. And remember that it takes a village to raise a child. I believe that it also takes the entire village leadership, those of you on this call, to create a safe community that houses that child's family. We have 90+ chapters in 37 states. We need you as part of our village. Thank you all again for attending with us today and being an active participant. Plug into NAREB. We are the guardians of our community, and we will never give up the fight for democracy and housing. My name is Donnell Williams. I am the president of the National Association of Real Estate Brokers. Thank you. God bless. Good afternoon and good evening. Take care.